Let's take a look at HSBC because Sherry, Bloomberg's learned that the bank is asking hundreds of managers to reapply for jobs in the new corporate and institutional banking division. The bank is continuing to try and streamline operations. Let's get more from Bloomberg Intelligence senior analyst Matt Ingram. So, is it necessary? Is it going to be effective given how many rounds of this sort of restructuring we've seen already?
Yeah, g'day Heidi. Look, this goes all the way back to Stuart Gulliver days 15 years ago. HSBC was present in 7 countries in 1875. It's now present in about 60. This needs to be done. There are still those fiefdoms that were formed in those intervening 100 years. There's clearly still a big cost problem, and that's centred on this corporate and investment bank. The way to do that is to look at which management you can cut and which management you can't. So clearly there's too much management within that global and sort of business line matrix that HSBC has.
In terms of the capital situation, what can we expect to see? It's interesting, we were talking to Stan Chart's Bill Winters, right, talking about the big question mark that remains over China, which of course HSBC has also strategically over the years really positioned to get maximum exposure from.
Yeah, look, I think shareholders have shown over the years with both these banks and others, they prefer to receive the capital back than see the bank deployed in places where the risk appetite is too high. So Stan Chart's got a big buyback, HSBC's got a big buyback. I think with slowing global economies, you can expect that they're going to give that excess capital back to shareholders. And that's, I think, what shareholders want to see.
What are we expecting in terms of more challenges for this bank in this rate environment where we're seeing more easing around the world?
Yeah, thanks, Sherry. Look, on the back of what Heidi was talking about a minute ago, I think the markets are pointing to a one-way street to rate cuts. I think central banks are being a bit more cautious about do they continue cutting. Clearly on the balance, though, I think HSBC's revenue challenges are still significant in 2025 and 2026. I think we're expecting 75 to 100 basis points from the Fed. That's got a nearly $3 billion impact on HSBC's top line. So they're going to have to find that somewhere else to support this return on equity and keep these buybacks coming. Clearly the place to do that is probably going to be to look at their middle layer management and say what can we cut and what do we have to keep.
Bloomberg Intelligence senior analyst Matt Ingram there with the latest on the HSBC.